Hi, this is Kerry Artek with Wicked Stocks, bringing you your weekly Mag 7 update series. This is for the week of Monday, May 18th, 2026. As usual, I start with Microsoft. Microsoft, if we backtrack just a little bit, threw off a significant sell signal back in the middle of March when it closed below this four-year channel bottom, anticipating not only the mid to upper 340s as a near-term target, but longer-term bearish continuation. We were anticipating the very real possibility of over the following, well, this particular event was from July to February. That's about, 6-7 months. So, yes, 6-7 months, there was a possibility of seeing the low 200 region, but it wasn't to be. It was back in April that we rallied to close back above it. This channel bottom has been holding roughly ever since. Holding above 406.95 does allow 487.45 over the next 2 to 3 months. In fact, that is what our target is now. And so in terms of Microsoft, I see no compelling reason to be short Microsoft. I think you can be long Microsoft. And in fact, I'm going to say we closed right at this channel top last week at 417.86. So we pushed through it on Friday. We eased back right to it. You know, if we can close above 417.86 this week, I think that nudges us further into follow-through rally within 2 to 3 months by the end of August or sooner, 487.45. Now, if you want one more element, just to be safe, 429.92, you see that black bar in the yellow square. That is the high of this low that was put out recently. It kind of is the indication that if we were to close above 429.92, this 4 or 5 weeks of congestion is done, and we should then see follow-through trending activity upside to 487.45. If we do close back below 406.45, this long-term channel bottom, we are back on the defensive with Microsoft, and I do think the mid to upper 340s are likely. And I'm taking it stair-step now to the downside. So sell signals, no broad brush stroke, no anticipating the low 200s, unless, of course, we were in the weeks to follow to settle also then below 344.79. But for right now, closing below 406.95, bearish into June, expecting the 340s. Until then, we are stable to bullish, and if we can close above 417.86, or if you prefer 429.92 as already described, then you're aggressively bullish as we move into June, July, August trade. The upper 480s likely where we could top out on a monthly basis. Let's move on to Meta. Meta did the same thing that Microsoft did, close below a channel bottom that wasn't 4 years in the making, but was solid, a full year channel bottom. It's at 598.99 this week. It also has been holding the selling pressure since closing back above it 2 weeks later. This is our base, 598.99 to 608.64. I think you can be long this market near to midterm, but over the next few weeks, I do think there's a good chance we will test what is a much more significant price ceiling at 689.77. I've been mentioning this now for a couple of months. 689.79 descending channel top is not only our resistance into the third quarter where we could fall away into the third quarter, but is also our upward pivot point through the rest of the year. So if in the weeks ahead we can close above 689.79, 796.25, the all-time high, likely then within a couple of months, and within 3 to 5 months of closing above 689.79, this 902.06 rising 3-year channel top where we could place a quarterly, potentially annual high. But right now, I would say we're in a two-sided framework between 608.64, the high of the low, and 689.79. And of course, we also have as our base 598.99. Now, if we do fall back and close this week below 598.99, Meta resumes a bearish framework as we move into June-July trade. I would expect within 3 to 5 weeks this low settlement price at 525.72, and within 2 to 3 months or less, 481.86. 481.86 is a 3-4 year channel structure that, if tested, can contain selling through the rest of the year, and we can round up nicely from here. We would still have that channel top that I mentioned earlier, in the 689 area. We would still have that to reckon with if we fell all the way here, but it would be dropping through time and would continue to be our upward continuation point on a quarterly and even annual basis. So closing below 598.99, I see no good reason to be long Meta if your time horizon is anywhere from 1 to 3 months out, because over that time frame, I would expect the low 480s, where you can aggressively pursue the long side of Meta as we move through the rest of the year. Let's talk Alphabet. So, Google, symbol GOOGL. We did back away last week. We closed negative on the week, but we're still just above this channel top at 397.65. And until we close back below this channel top, I have no good reason to be bearish Alphabet. Now, we've had an incredible run off this March low. We did put out a new all-time high last week and closed negative on the week. I call that kind of a mini reversal. Now, had we put out a new all-time high and then closed below that low from the previous week of 379.79, that would have been a key reversal high, a likely sign for bearish continuation to at least 349.00. 349 even is that high from February within a few weeks and possibly even further south. But right now, I am bullish with continued weekly settlements above 397.65. So if you are long Alphabet, if we close the week above 397.65, stay long, 425.89 in reach over the next few weeks. This is a full swing. I don't have it properly annotated, but it is nothing more than that February high minus the March low, and then you add it back to the February high, the full swing. We could top out here for a week or two, but bottom line, continued weekly settlements above this, what is essentially a one-year channel top at 397.65, will keep, possibly within the year, this 503.92 full channel extension in reach as a longer-term objective. Downside, very simply, closing below last week's low, which is the move high so far, the all-time high, closing below 382.77. I do think you can bail on a long position. I do think that by the end of, maybe by the end of May, but within a few weeks, we could find ourselves in the 349 area. And yes, there is a channel bottom well below the market right now in the 290s that I think is not out of the question. If we, after all this, closing above this one-year channel top a couple of weeks ago, and then falling away and closing this week below 382.7, I would expect at least 349. And I do think there's the very real possibility that within 2 to 3 months, we can find ourselves in the low 300 region where one could bottom pick the market through the rest of the year. But we're not there yet. We would be with a weekly settlement below 382.77. But until then, closing this week above 397.65 maintains a bullish framework through the third quarter. Let's move on to Amazon. Amazon has had quite a run following the buy signal that played out in early April above this descending channel top. We reached the previous all-time high at 258.6 within 3 weeks. We blasted right through that, and now we're approaching this 288.49 3-year channel top. What did contain the highs a couple of weeks ago was this intermediate structure at 279.75, and I think you can say that the 279.75 level is the beginning of basically a 9-point range of resistance up to 288.49 that may well contain buying through the third quarter, and from here we can fall away. We fell away last week, and in fact we closed below the low of the high. And so I am going to skew slightly to the downside right now. The only thing that keeps me from getting aggressively bearish is the fact that we are still above 258.6, this prominent high that was put out in November. And yes, if we close below 258.6 this week, after closing the previous week below the low of the high, I do see this 220s and dropping as a realistic 1 to 2 month objective where we could actually bottom out through the rest of the year. And I say through the rest of the year because if you take a look at this chart closely, this descending channel top will, over the next, by the middle of July, late July, converge with the channel bottom, the top of which contained the highs a couple of weeks ago at 279.75. Its channel base is presently in the low 200s and will be in the 210s. So what am I saying here? I'm saying that if we close below 258.6, we can find ourselves in the 210s. 220s over the next 2 to 3 months, where we could form a good low through the rest of the year. If we do close back above this low, which is 268.79, you can see that black that black line in the middle of the yellow box, 268.79. If we close back above it, we'll probably test 279.75 the following week. And yes, 288.49. We're very close to reaching this objective. This is the zone to take profits on a long-term position, on a long position, because it could contain buying through the rest of the year. And yes, if we were to close above 288.49 in the coming weeks, that is a significant show of strength for Amazon. I don't even have a target mapped out yet, but it would be a significant gains I would expect through the rest of the year. But until then, this is a significant zone of resistance. I don't have any problem unloading long positions in Amazon between 279 and 288 because this is an area that may contain buying through the third quarter. On to Apple. Apple we cover every single week at wickedstocks.com in our subscription side of the market. And we get into a detailed 5 to 10 minute video every week on Apple, but this is just broad brushstroke. We did indeed close for the first time above this 6-year channel top that's been holding now for the last year and a half, and we did so by the full required 1% margin. So 292.31 is your new base of support that can contain selling, I'm going to say, through the rest of the year. I do think over the next 2 to 3 months or less, we should test this 323.92. We could top out here on a quarterly basis and fall away, perhaps back into the 290s, but I think over time we are looking for 392.03 by the end of 27, I will say, and potentially by the end of 26. If we continue rallying as we have and then close above 323.92 over the next month or two, that is an accelerated move over the following 3 to 5 months into the 390s. Downside, if we do close back below 292.31, that does set up, well, there'll be other elements. What I would expect would be this channel bottom basically in the 240s, 250s actually. But for right now, I'm just going to hold to this low area, 243.42. Closing below 292.31, it is get out of Dodge. It is play the short side of the market, at least exit a long position, because I do think the real risk is falling back into the 250s within a couple of months. But until then, the bullish framework remains decidedly intact above 292.31 as we continue through the rest of the year. On to Tesla. Tesla we cover every single day at our free YouTube channel. You may have already seen this video, but it is, we came off of this channel bottom about 6 or 8 weeks ago, 347.63 base of support, able to contain selling on a quarterly, possibly through the rest of the year basis. We did have this rising channel bottom as our objective, and that is right in this area as well, but we're keeping it simple now. This descending channel at 453.29 is our sign of secondary buying that should play out then into June, July. But until then, we could fill this wedge out for the next month or two. I don't have a sell signal in play that indicates 347.63, but this is an area we met an objective, we backed away, closed negative on the week last week after this incredible rally at 2 or 3 weeks earlier. So I do think the emphasis is more to the downside right now. Possibly all the way back to 347.63, where we could bottom out through the rest of the year and round back up. We could fill this wedge out for the next couple of months, but if we do close above 453.29 this week, I would expect within several weeks the 498.83 all-time high from December of last year, and within 2 to 3 months, this 541.30 6-year channel top would be expected, where we actually could top out through the rest of the year and possibly well into next. So closing above 453.29 presents a buy opportunity for Tesla as we continue through the third quarter. NVDA, we cover every single day in our daily NVDA report at wickedstocks.com. You can see that every single day we do at least a 5-minute video on NVIDIA outlining the 3 to 5 day and 3 to 5 week scenarios. But you're well aware, if you've been following our weekly Mag 7, that it was 5 weeks ago when we settled above this channel top that is now at 194.10, anticipating the low 240s, 241.35. Now, we fell away pretty aggressively on Friday from the high that was put out at 236.54 on Thursday. But, you know, we can pause here. I do like this area. If you're looking 216.82, 217.80, this is a pretty decent support, at least early in the week, above which over the next week or two we can finally reach this 241.35, where we can top out through June and even well into the third quarter. Downside, if we do close the week below 216.82, I would expect within 1 to 3 weeks, this 194.10, where we could bottom out through June into July and round up again. So yes, this 216.82 is a pivot point inside of these two significant levels, 241.35 upside, 194.10 downside, and I'm going to leave it at that. Let's move on to, this is a point I want to make. Well, I'm going to make this point last. Let's move on to Palantir. Not part of the Mag 7. We do cover it every week. 125.41, this is the high area from February, held the lows pretty well since February, and it is still there. It is a platform of support that may contain selling, for not only the week, but through May and into June. And from here, we can round up into the 150, 175 area. This is still kind of your 3 to 5 week swing trade ping pong, if you will, buying the mid 120s, selling the low 150s. I'm going to move down to the next chart. I will show that if we close below 125.41, 109.92 is likely within 1 to 3 weeks, depending on volatility. And, we could bottom out here for a month and round back up in the mid 120s. There's two schools of thought here. One is you play the short side into later year below 125.41, but I think that's too easy. I would rather wait for the settlement below 109.92, quite honestly, because I do think that this just might contain selling pressures a little bit longer than that, and from there we could pop back above 125.41. So if you're going to play the short side over a 2 to 3 month time frame, it would be a settlement below 109.92 that would then indicate this low to mid 60s as a 2 to 3 month target. Until then, I do think, because there's really nothing here, I have no problem buying this. I like these scenarios where everybody and their brother can spot the mid 120s, but to spot the 109.92 areas is sort of quiet support that but just might, looking back over time, contain selling on a monthly and even quarterly basis. I would go with that, and I wouldn't be short Palantir into July unless we were to close below 109.92. Upside is the last chart I'll show here, and that is holding above 125.41 will keep 162.15 in reach over the next couple of months. This is our upward continuation point into later year. If we can close above 162.15, we should push into the 240s and climbing. I'm going to call this a 3 to 5 month move. Until then, this is very sellable resistance at 162.15. So if you've been bottom picking the mid 120s, I do think you want to unload in the low 160s and even play the short side. This is a big deal, can contain quarterly buying pressures, and if settled above, bullish continuation into later year. Last chart I'm going to show, and I just hit 17 minutes, so I don't like to go that long, but this is the S&P 500 index, and we hit a big area last week, this long-term wave counts. This is the stuff that I present every week at our wickedstocks.com subscription. We do cover the S&P 500 index, and you can just kind of pause, and you can see the simple math behind it. You've got a series of significant wave counts. They came together, 74.59 to 74.91. This is an area where the market reaches a balance, an equilibrium, and because of that, we can fall away from here. Back to 68.53 over the next couple of months. I think that is the risk to the downside. If we can close above 74.91 this week in the S&P 500 index, a bullish continuation into later year. But until then, we have reached an important point in this market. The path of least resistance is downside below 74.91, 68.53 in reach over the next couple of months. I think that pretty much rounds it out. I am going to leave it at that for this week's Mag 7. You have a great week.